They say technology makes our lives easier for work, to learn, to travel, to communicate. But there are things that machines cannot yet do. Things as important as engaging, putting ourselves in your shoes, having intuition, or making intelligent decisions. In an increasingly technological world, we need professionals who provide intelligent solutions based on their know-how. Because there are things that technology cannot yet do for you. The human tech.
Good afternoon, everyone. Well, thank you for joining us today on the 28th of April, 2026. Today, we're going to talk about this topic about paying taxes. The thing that we don't really like, but we must talk about the paying taxes. So here, what we try to do is do a 1-hour webinar to talk about taxation from a fiscal point of view, as a resident, as a no-tax resident, and from an investment point of view. Let me introduce you here. We have Michael Davis, abogado. Hello, Michael. Good afternoon.
Hello, Ignacio. Hello, everyone.
As a financial advisor, independent advisor, we have Rafael from Wealth Management. Hello, Rafael.
Hello, Ignacio, and hello to everyone.
And then from the Alicante province, we've got Pedro Heredia. Hello, Pedro. How are you today?
Hello, everyone. And nice to see you, all of you.
Right. So as discussed, today we're going to talk about income tax return and taxation. For those of you who spend more than 183 days in Spain in a calendar year, so that means 2025, this webinar is for you. On the other side, for those who did not spend 183 days, probably it's a bit more straightforward and simple, and Michael will tell you exactly all the ins and outs about taxation. Just please send us your questions in the chat. You will see on the right-hand side, you have a chat, and then we're happy to take, if possible, your question. We have Lily here. Nice to see you, Lily. And we're going to start over with taxation in general in Spain. Okay, Pedro, would you like to start giving a little bit of advice for those who spend 183 days in Spain? Obviously, they could send us here. Where are they contacting us from? Are they British, Americans, Dutch? So it will really depend on the dual taxation treaty between Spain and your home country. And with regards to Rafael, we'll discuss later on about investments and obviously cryptocurrency as well, which is a topic that is quite interesting, quite variable, and but we could see, Rafael, what kind of recommendations you might do to the audience. Okay, over to you, Pedro. Thank you.
Okay, okay. Thank you, Ignacio. Thank you, everyone. Okay, just to give like an overview of taxes and residency in Spain. That we have a lot of questions every week about someone who is considering to relocate, is considering to invest in Spain, or spending significant time in this country. As you started, I mean, let me just start with the concept of tax residency, which obviously mainly we always say about this general principle, which is if you spend more than 183 days during the calendar year in Spain, in Spanish territory, is from the 1st of January to the 31st of December. But if you spend more than that, then you become tax resident in some way. But also, there are some other principles or other criteria. It's like we call it like it's a very complex concept, but let's say it's like a main economic interest and are located in Spain. I mean, centro vital intereses in Spanish is like if your main issue, the business, professional activities, investments, it's a subject in some ways, but it's like some principle that is if it is in the Spanish territory, then it means that even though you do not spend more than 180 days, looks like that you are really resident in Spain, tax resident in Spain. And the third criteria that anyone have sometimes asked is, what if my family, what if my spouse, what if my dependent children are living habitually, permanently in Spain? Well, there's a presumption that if they, your spouse, your children, your family are living in Spain and residents in Spain, it looks like, and it's a presumption that you are also tax resident in Spain, unless, obviously, if you are inspected and you prove that you are not living in Spain more than 183 days, then you are not tax resident. But that's a presumption. Okay. What if you qualify to be tax resident in Spain? Then, well, you have to show, you have to declare, you have, according to the double taxation treaties between Spain and the territory where the income comes, you have to declare worldwide income. And that obviously includes all the income. I mean, income that is in Spain done, or income that is worldwide income, any place. And in Spain, we have like a progressive tax, which means that the rate increases as your income increases. So it's depending on the region. Also, there are some Valencia region, for example, has some slight changes between the regions, but it's a government tax and a regional tax, and both together it comes from I would say from 19% to 47%, let's say, or even higher, could be 48, and depending on the autonomous the region where you may have your residency. Includes income, includes salaries, includes rental income. I'm living in Spain, I'm tax resident in Spain. If I have a property in the US or in Canada or in the UK or anywhere, and I'm renting that property, should I declare that in Spain because the property is in outside Spain? Yes. Obviously, according to the double taxation treaty, obviously, according to the criteria in order to avoid double taxation. That's extremely important. We are in the office, we are obviously specialized on that. We check perfectly all the double taxation treaties with clients, and obviously in order to avoid double taxation and to obviously implement the situation where you need to pay sometimes part in the home country and sometimes and the rest in Spain in order to avoid double taxation. And in many issues, in many occasions, you have to declare and pay taxes in Spain. I just gave an example of rental, because normally with rentals and properties, as it's located in one country, the taxes are paid there. For example, capital gains, if you sell a property, or you sell, or you get some interest, you get some dividends. Sometimes there are some countries that you have to pay partially some taxes in that country. Then we have, obviously, if you become tax resident, wealth tax. Depending on the region, the threshold is an exemption on some specific base assets. In Valencia region, for example, is from 1 million or up to 1 million is exempt, and from 1 million starts to be taxed. There are some other regions like Andalusia, and Michael is living there, and he will speak about that, and Madrid, and some other regions. Baleares has been also, or the north of Spain as well, has been eliminated or reduced a lot. Let's say that. And then additionally, also, we have inheritance tax or gift tax. That also varies significantly if you live in one region or the other one. It doesn't match. I mean, it's not the same if you live in Andalusia, for example, where the inheritance tax is fully eliminated, as it in some way also is in Valencia region, which has been dropped down between family members, the first spouses and children, and also has been reduced a lot also between the second line of families. So it's for the first line, which is spouses and children, parents, grandparents, that has been dropped down the quota to 99% less, so which is almost eliminated. But there are some regions, like for example, Catalonia, which is Barcelona, for example, the taxes are still a lot, Anyway, and obviously, there are some clients also, they become residents, but they become residents and they have a corporate. Well, there's a very complex, I will not enter on that. And there is also a tax regime, which is a non-resident tax regime. We call it ley Beckham or Beckham law. Is when you become resident and you are a resident and you are really living in Spain as a tax resident, but because of some circumstances, you fulfill the requirements to be treated as a non-resident for tax purposes. And that is something that very specifically, and in many occasions, I would say that normally when you are employee of a company and then you come from that employment to Spain, working in a company maybe abroad or working in a company that it is in Spain, and you come here as a non-resident for tax purposes in this case. Also, as a director, there are some specific situation criteria on this issue. And it's extremely important to plan and really on this before you move, before you relocate, about what is going to be your situation. We make many simulations on what will be your situation whenever you move in Spain. What is your income? What is your assets worldwide? And prepare, or to be prepared whenever you move. What is going to be your tax situation, and whether you need to plan or do something maybe before being tax resident, or what will be your conditions. And maybe if you are tax resident, once you are tax resident, and this will be said by Rafa, maybe to move your investments, or maybe to get some, let's say, benefit in case that you get some capital gains, maybe moving or doing another investment with some requirements as well. What is important, the tax compliance and planning, it's extremely important, extremely, I would say it's a principle before relocating into Spain. And just briefly and summarize, Ignacio, I think is to start is enough, and I will be listening to the rest of the speakers and obviously intervening in the questions and answers.
Okay, well, thank you very much, Pedro. Now we're going to pass on Michael. He's going to give us a little bit of a background, who's considered to be no tax resident and who's eligible to pay non-resident tax. For those of you who are spending less than 183 days in a calendar year, okay? Don't get confused with immigration, having the permit, and the tax period, okay? Over to you, Michael.
Thank you. Okay, so I'm Michael Davis. I'm a Spanish lawyer here down on the Costa del Sol. And by the way, thank you for inviting me to your webinar, Ignacio. Let's go into the non-resident tax. Pedro's done all the difficult part. I'm going to do the easy bit then. So non-resident tax is, so basically if you're a foreigner, you buy a property in Spain and you spend less than half the year in Spain and you have a property over here, you have to pay what's called hypothetical income tax, non-resident tax. They call it all sorts of things. Gets people very confused. They think, how can there be income if I'm not actually renting my property out? But there is. So for the typical couple, they come over to Spain, they buy a property in Spain, they've set up the electricity, the water, the rates, the rubbish, community of owners by direct debit. Their solicitor will have done that as part of the conveyance. Once a year, they have to file a thing called non-resident income tax return. And basically what it is that, and you pay this even if you don't rent out your property. So if you don't rent out your property, what the taxman actually does is they create this fiction where they take the cadastral value of your property, which will appear on your rates bill and is substantially lower normally than the market value. And they consider that your income is either 1.1 or 2% of that amount. Normally it would be 1.1, but if the cadastral value is very outdated, then they make you, this is a magic date, the cutoff date, and then they apply the 2% instead of the 1.1. And then you're taxed at 24.75% of that amount. And you pay every year, 1 year in arrears. So for example, if you purchased in 2025, during this 2026, before the end of the year, you'll have to make the return for last year. If you purchase during 2025, you don't pay for the full 365 days, you pay for the proportionate days of ownership. So for most people that simply have bought their property, have got their bank account, made their Spanish wills, I say all those things set up by direct debit, and once a year they have to file this non-resident hypothetical income tax. Unlike the other things, you can't simply set up a direct debit and forget about it. You have to either hire a lawyer or an accountant to make the return for you once a year, which is definitely what I would recommend. Or you could try and do it yourself. You're allowed to do it yourself if you don't have more than one property. As I say, I think at least the first year, I'd go with the solicitor that handle the conveyance for you, let him do your non-resident tax return. And then if later you feel that you're up to it, then you could give it a try. But the thing is, it's sometimes good, the way I see it, is to have someone in Spain who can take care of your tax affairs if you receive a letter and things like that. So it's just good to have a person that will, in the future, not just deal with non-resident tax returns, but also deal with communications and problems that can arise over the years. If you do rent out your property, which could be the case, then the first thing is that those are non-residents that are from non-EU countries. Since last year, they have now got the same, they got allowed to claim deduct their expenses, which they weren't allowed before last year, when a sentence told Spain that non-residents that are members of non-EU countries had to be treated the same as non-residents that were residents of EU countries. So basically, if you do rent out a property, you'll have to do a return declaring what your real income is, deduct the expenses, and then pay your non-resident tax on those days. So if some of the days you've rented it out and some of you have not, you declare all the days that you've rented it out, the real income, and then proportionally all the days that you haven't rented it out, the calculation as we made before, are just proportionate to the days that you haven't rented it out. I think for non-resident tax, that's sort of it in a nutshell. It is very, very easy and very straightforward for non-residents. In some autonomous regions, you also have wealth tax to deal with, but that's depending on the region. And here we don't have wealth tax. In some other regions, you do have wealth tax above a threshold. And then we also have the famous solidarity tax, which is like another wealth tax, but that's only applicable if your assets are above 3 million euro in Spain. And it was a couple above 6 million euro. So not many people are affected by it. So I won't go into the detail of that. I don't know if you want me to go into any other detail, Ignacio, if that's sufficient. I think that's just
I think that's good enough to start with, and then we're going to jump onto Rafael now, talking about investment for residents, for non-resident, and specifically for those who have the cryptocurrency, which is an interesting topic as well to take into account, which I always, Michael, worry from an inheritance thing point of view, because I always try to wear the shoes of being the executor beneficiaries when you inherit a cryptocurrency as well. So that is a good challenge as well. We could discuss because you're a specialist.
Well, yeah, crypto, it's a big problem. I mean, the crypto, as you say, we had lots of inheritance cases. And one of the problems, I've seen one of your videos before, another webinar, where you insisted on people making sure their family knew where their assets are. And it's become very important now because we're finding that with everything going online, in the old days, the family would go through the drawers, find the statements from the bank. They'd know which banks to approach. Now that doesn't happen. And then we've got the new situation with Bitcoins and other cryptocurrencies that nobody knows the codes, and assets do get lost. So it's a great
my main worry, Michael, the thing is, my main worry here from inheritance, when we draw up the wills, as you know, a lot of clients have investments and information that is obviously confidential and private. And I always say, Michael, just send me, as executive, send me the list of assets. I don't need to know the amount, but if something happens, we need to know who to contact, because otherwise it's lost in the sky. And cryptocurrency, now I want Rafael to tell it, because I consider it's quite interesting in this respect, but not only income tax return, but what happens if
the cryptocurrency is a big problem, because who do they give their codes to? That's the problem. I mean, so with the property, we always, whenever we do a will nowadays, we make sure we scan all their title deeds to keep them with the will. With the bank accounts, we tell them that at least we need to know who they bank with, what bank it is. But then who knows what to do with the cryptocurrencies? Because it's like, I can't have the codes. Who do they
Michael,
give?
Yeah, let's think about what Rafael has to offer. Whether we could we could see there is a solution to it, because
Okay.
and then we could take it further, and you could tell us a bit more about cases that you might be dealing with, or from an
Okay.
inheritance tax point of view. Over to you, Rafa.
Thank you. Thank you, Ignacio. Thank you very much. Okay, cryptocurrencies. That's an important issue, and what we are recommending right now is to invest into cryptocurrencies through regulated instruments and through financial institutions. That way, you don't have to care about passwords. You don't have to care about where they are really held at, and you can have all the information in the same any of the financial institutions you work with. And how to do that? That's investing into cryptos through ETFs, through exchange traded funds. So you will be playing with big names, and you will have some advantages to this. The main advantages are security and professional custody. So you don't have to deal with all these passwords, and also they are held. The custody is professionally done by big names like BlackRock, Wisdom Tree, uh, Franklin Templeton, many of the big names you can think of the funds industry. They are already offering their ETFs. And then there's also advantages like very simple operative. You order to buy, like you would order to buy a stock or a mutual fund. So it's very simple to buy, very simple to sell. There's immediate liquidity for that, because we have found that many exchanges in the world, they give you a very easy operation for buying, but a very difficult process to get your money back from those investments you made in cryptocurrencies. They ask you to open bank accounts in different countries, and there's a lot of hassle when you want to get your money back from those cryptos. Then there's also the cost thing, because you will be paying costs for buying and for selling, but just like a normal stock, something like ranging from 0.1% to 0.3% on buying and or selling. The transparency is high, so you always know the value of what you're buying. You're buying at regulated prices that are quoted on a market, and then you can access also big diversification, because between the different ETFs that you can access to, you can go directly into just Bitcoin or the whole cryptocurrency market. Most of the ETFs that let you access the whole cryptocurrency market, they make this diversification by market size. So you're probably buying an ETF that is like something like 60 to 65% of Bitcoin. Then you have 20% Ethereum, and then you go down on these figures to the lower or smaller currencies. But you can access the whole crypto market. And then there's also professional managing into which cryptocurrencies to add, which cryptocurrencies to skip, and you end up doing an investment that was considered very risky and very difficult into an investment that is very simple, very efficient for the costs, and also for inheritance, and to be able to have all your inheritors to have access to the information very easily. Like they will go to the usual banks and have all the statements of what you have there: mutual funds, pension plans, everything, and cryptocurrencies. So it reduces all the hassle and what you have to learn about on how to trade these cryptocurrencies.
Rafael, just one question. You're talking for residents, but for the non-resident as well, correct?
Yeah, in this case, it makes no difference, because we really recommend using professional and regulated products to both residents or non-residents to avoid all the hassle that has been
Yeah.
historically related to cryptocurrencies.
Is it something that you could help clients organize in a portfolio, and or is something that you don't deal with?
Oh, we do deal with, yeah, yeah.
Because as a
We have
company,
been adding in our portfolio of products these ETFs as they have been accepted to trade in the European Union, and
right?
we have all the information so you can invest in Bitcoin in dollars, Bitcoin euro, diversified portfolio of cryptos. Uh, there are some differences between the ETFs available, and we can help to choose the one that really represents what you want to invest on.
And with regards to taxation, Rafael, how does it work? How does it work for those who've got these products?
Okay, this would assimilate exactly as the taxation of stocks or mutual funds
Okay,
at the
so shall
selling
we talk
point.
about the selling? So let's say we invest cryptocurrency, we could create a portfolio, right? So if we tell you that we want to create or invest in cryptocurrency through an ETF that you deal with, is the client able to choose the everything through you, or is it you have something set
No,
for the client?
they can do it
They can
directly
choose.
with us. Yeah, they can do it directly with us. We will have like right now like 10 to 12 options on which to
Okay.
invest with little differences between them, uh, but very easily to understand.
Okay. So, and taxation wise, so you will only tax is exactly the same 19%, 21, 23, 26, 28, 20, 30, exactly like investment.
Yeah,
And they will only be taxed on the selling stage, correct? So if
that's it.
they invest it and they don't sell it, right? And another question, important question, from a beneficiary point of view, is there any way they sign with you to name beneficiaries as well, like we do with insurance or investment, or that's
No,
something
it will be the
they need to make
same.
aware?
Yeah, it will
Okay,
be the same as the usual financial assets. You
okay.
have them on
So it's a
your
will.
testament. Yeah, that's it.
Okay. And through the inheritance procedure, the valid thing will be the will. It's not like specific products or policies that you name beneficiaries. In this
No,
case, you cannot name beneficiaries,
you
correct?
cannot
Like
name beneficiaries. Yeah, that's it. That's it. And
understood.
then you will have a clear value that will be provided to you by the financial institution of how that cryptos were valued at the moment of the death of the owner. So it will
Mhm.
be easy to value to do the inheritance tax.
Okay, very good. Okay, now I think Guillermo is going to share with you now how it looks like for those who don't know. I don't know if Guillermo can listen now or these accounts, but Guillermo, could you share with us the income tax return form? There we go. So if you scroll up, yeah, it will have a person, the birthday, obviously, in what community you will be, income from work, 18,000 euros. Obviously, this is the interest from bank accounts. So how much you got paid, dividends, how much you got paid, 400 euros, for example. So the total taxable amount. So you will see that one thing is income from work, one thing is income from investment. I understand that cryptocurrency will be here as well. Now, going down, you could see the property. So you will have to declare the name of the tenant, how much income you've got, the contract date. Long-term rental, still very good and very efficient. So for those of you who are thinking about selling or not selling, obviously, I always say if you rent it out and you get an income and you don't mind having the hassle of dealing with it, it's very efficient because nowadays it's 50% is tax free. right? So I consider is good from a tax point of view. For those who are over 65 and you are thinking about selling your property, you could, as a resident, you could sell the property and reinvest all this profit up to 240,000 euros into an annuity. If you want to convert it into a life pension, very efficient. Okay, it could go only taxable 20% of the pension or 8% if you're over 70 years old. So it's a very efficient product for those of you who are tax resident over 65 and are thinking about selling the stocks and not doing anything else, tax-free, or selling property tax-free. I mean, I've got a question here about, is it better to just get ready of everything before you're tax ready in Spain? And I always say it's efficient to do tax planning. How much will you pay in a situation? How much will you pay if you become a taxpayer? And is a figures game. Okay. In general terms, some people say, Ignacio, is tax-free in the UK 25% to withdraw it? Okay, well, fine, go ahead for it. But if you are a resident here and you withdraw your investments, you're going to be paying taxes, as DM was showing here. DM, could you scroll down and see a bit more? If we could show him a bit, is a national thing, a national income tax, but the tax is split it. Then you have the minimum amount, the allowances that you get for these each. You get the 6,700 euros, and then you have 2,000 euros extra if you have pensions. What else could I tell you about these? All these figures is better not to go into detail because it's complex to explain. And then the taxation to pay in this case, probably, I don't know, Guillermo, how much will be the percentage, but the tax, I think in this case, 7 and 6. So 14% after the allowance. The allowance in Spain work differently, for example, than the UK or the US. Some people think that is like tax-free, and here is a bit more complex system. So if we're talking about here 14%, they do a system that they put everything together. This is the marginal rate. Then the allowance, you use the same and deduct it. So it's not like in the UK, they say £12,000 is free and then you start from zero. It doesn't work like that here, unfortunately. Okay. Well, Guillermo is showing here that is 19% in this specific case. And the tax could be paid in 2-stage payments, which I don't know if we could see here. Well, this I just is only one here, but you could do on the 30th of June, 60%, and 40% in on the 5th of November. Okay. Okay, thank you, Guillermo. Important things that I like to share with you that I consider that good, just for your own knowledge. If you're over 65, selling your main property that you've been living more than 3 years is tax-free. One client of mine today was quite surprised. They wouldn't believe it, but it's true. Over 65, more than 3 years being resident in that property, selling that property is tax-free. If you're below on your main property, it's tax-free as long as you reinvest the whole amount of profit and money into a new property within 2 years from the selling. So you need to be 3 years tax resident, then sell the property, reinvest the whole amount of money, and then you could claim tax-free here. Important things for you to know. The annuities, I consider efficient products for those who are self-employed, having private pension plans. It could be this year up to 5,750. That's the maximum amount to deduct it as an investment. Okay, tax efficient. And the annuities, whenever you sell the property, I think, Rafael, I don't know, it has to be over 65, correct? The annuities to be tax-free, correct? Or very, very efficient. So if you want to tell us a little bit more,
if you want to lower the capital gain of the selling of any of the assets you have on your wealth, you have to be over 65 to apply that. So If that's the case, you are over 65, you expend part of the selling price into constituting an annuity, then you can get rid of some part or even the total amount of the capital gain taxes.
Right. And the other products for those who've got reverse mortgage or equity release, that annuity that they pay you is exactly the same treatment as Rafael is saying. So they're paying you like a pension of 600 euros annuity. The annuities, they've got a special tax regime depending on your age. So I always think it's good to discuss with your accountant, advisor, possible ways of minimizing the tax for your personal circumstances. What is good for you might not be good for somebody else. Okay. Now we're going to jump into questions. I don't know if any of you in the panel would like to jump on. Michael and Pedro jump into it. We didn't touch wealth tax yet because, well, Michael said Andalusia is exempt. Thank God. Here, Madrid, Andalusia, and I think Balearic. In our community, we only have 1 million plus the 300,000 euros allowance on property per person wealth tax. Okay. And for non-resident, 700,000 euros, okay, in this region. For those who are willing to buy a property in Spain, there is a system as well. I found out the other day, some banks are offering about doing investment and guaranteeing that investment abroad. With that money, they will lend you the money to buy a property. And depending on the area, for example, in Andalusia, as Michael said, there is no wealth tax, well, it's great. But if you want to buy a place as a no-tax resident, and you don't want to pay, for example, our community wealth tax, there is a way, a legal way, obviously, to do it, and you get a loan of abroad. Is they call it Lombardo, Credito Lombardo. And it could be efficient from a tax point of view because you lend the money, and because no wealth tax for non-resident and income tax for non-resident is based when they are located in Spain. So assets abroad are not taxable in Spain for non-resident. Okay, I'm going to pass over to Michael and Pedro for them to start answering the related questions. Would you like to start, Pedro, with anyone that you've been dealing with already? And the microphone is off in your guys, but you could turn it on and then straight in.
Okay, well, let's start from the previous questions. I mean, is asking Michael about the 183 days in Spain or EU. Is in Spain also included in some area this sporadic lives on the Schengen area is included also as a tax resident in Spain. So it's 183 days, and that is a question that many people sometimes not misunderstand. Well, I'm going to be 170 days, and I will be 1 month in Italy, another month in France, another month somewhere, and I will not become tax resident. That's not true. You will become tax resident in Spain, though there's sporadic really issues, and obviously in this case is to avoid that. What is a must that you need to be tax resident, you fulfill the requirements to be resident in some country and to be tax resident in some country. So you need to fit that or understand that even if you may be not being 180 days in Spain, you could be also tax resident if you do this kind of issues. If you fulfill the requirements to be resident in another country because you have spent, in this case, more than 180 days in some other country, or you fulfill the requirements to be resident in that country, and you have a certification, and this is what we always apply, a tax resident certification in that country that you pay taxes there, and then we'll avoid any issue about tax residency in Spain. I've read some question I will not enter about the crypto, and this says by Ishai, spending less than 180 days in Spain under the NLB, non-lucrative visa. Am I tax resident this year? Well, the non-lucrative visa, to start, it gives you authorization to live in Spain 1 year, then you renew it for another 2 years. if, as I said at the beginning, if you spend less than 183 days in Spain of the calendar year, then you are not really tax resident. You have to be tax resident somewhere. That's correct. You have to be tax resident in your home country where you live or where. But obviously that may arise a problem that if you do not spend at the end half of the year that you are authorized to live in Spain, you may not be able to renew the authorization to be resident in Spain. Okay, let's see more questions. I'm an American jubilado in Barcelona. I already filed my income tax in the US. This is the first time I'm filing income tax in Spain. And I only have my pension to declare and prepare my taxes by myself or need to see a gestor. Well, I fully recommend to see a gestor. I fully recommend to see a tax advisor, a gestor, a tax a lawyer, in order to advise you about your income, about the taxes, about how to recommend when to do it and how to do it, and in order to be efficient in taxes. For example, with the Americans, what we normally recommend in most of the cases, not everyone, not all, but most of the cases, to prepare firstly the Spanish tax, filing the taxes in Spain, postpone, extend the declaration, submit the declaration in the US, declare and pay taxes in Spain because the double taxation treaty says that you need to declare and pay taxes in Spain. It is an agreement between US and Spain, and then declare it accordingly in the US, having paid taxes in Spain and also get a tax credit in the US. That is what is normally done with the US tax payers are living and being tax residents in Spain. Okay, I don't know, Michael, if you want to enter in any
I'll take the one that's time stamped 1745. They're asking Michael Robin, for inheritance tax, do we only take care about the location? It says here province, but obviously it's region under here, to the dead person, also from the beneficiaries. Okay, this is something that is very complex. And I'm going to try and explain it really simply because lots of people get this wrong. Lawyers get it wrong as well. So it's not easy. So let me explain. Where do we pay one thing is where we pay our inheritance tax. Another thing is which norms are applicable. We've got legislation and jurisdiction. Okay, so let's start off if the beneficiary is a non-resident. If the beneficiary is a non-resident, they will present their inheritance tax clearance documents to the National Tax Office. But if the majority of their assets that they're inheriting are situated in a region of Spain which has extra exemptions, they are allowed to actually claim them. So in other words, you present to the National Tax Office, but your lawyer needs to make sure that when he presents the self-assessment, he says, my client's a non-resident. The beneficiary is a non-resident. So we're presenting to the National Tax Office. But the assets are situated in Andalucía, for example, or in La Comunidad Valenciana, where there are extra exemptions above the ones at the national level. He's allowed to, even though he's presenting to the National Tax Office, because that's where the jurisdiction is, he's allowed to claim the more beneficial norms that exist in the region where the majority of the assets are situated. Lots of mistakes are made here because it's done by self-assessment, they can forget to claim the exemptions. Now, things are different if the beneficiary is a resident. If the beneficiary is a resident, what we've got to look at is where the deceased person was resident. So the deceased person was resident in Andalucía, and the beneficiary is a resident, even if it's another region, he will be presenting his inheritance tax return using the legislation applicable in Andalucía regarding exemptions. Probably as long as people, the only real message with this is that where you pay your inheritance tax and which norms are applicable are a complex thing that you need to look into very carefully when you're presenting your return, because it's not easy just to understand it in one. That's why people get so confused when they're looking up online to see what taxes they've got to pay, because they look online and they see that there's 17 different, depending on the region, there's different levels of inheritance tax. And in fact, you can actually present to the National Tax Office and still present it with regional exemptions. And then if you add to that, on average, they reckon that the 17 regions of Spain have changed their inheritance tax exemption rates about 2 times on average during the last 10 years. And you could be looking at a website that's 5 or 6 years old. It's very easy to get really confused when you're trying to work out what the inheritance tax is. I've tested ChatGPT and Grok to see, and they still get it wrong very often, because there's all these different regions, different and different changes in the regions over the years. So it's something that definitely deserves looking into if you've got a case.
Rafael, would you like to answer anything related to your business of, well, obviously investment, cryptocurrency? I think you have a few here.
I already answered a question that I think can be interesting for other people. They were asking they were Spanish tax residents with property in Australia, over 65 years old. So selling that property in Australia could give them the benefits of constituting an annuity. And the answer is yes, because if you are over 65, you can have both advantages of constituting an annuity. One of them is get rid of the capital gain taxes. The other one is have a very low taxation on the return you get from that annuity. Okay, that applies to people over 65 years old for any kind of asset they own, and wherever it is the asset. Okay, once they are Spanish tax residents, they can be selling properties, they can be selling art, they can be selling racehorses, as I like to say, almost as a joke. But everything and anything they have in their wealth that is sold and has a capital gain within it can benefit from that if you invest in an annuity. And then, as you are over 65 years old, 92% of the return you get from the annuity will be exempt. So the final taxation is really, really, really low, because that 8% that is not exempt would go to the tariff that ranges from 19 to 30, but you're probably being under 25% taxation on only 8% of what you get out of the annuity.
And Rafael, one question: what about inheritance? Let's say we set up an annuity, and then I get a pension, well, an annuity. And what happens if I pass away, or my wife? Does my wife get that part of the annuity? And do I lose out all the profit I invested? How does it work?
Okay. Here there are two things to consider. If you do the annuity to get rid of part of the capital gains you had on selling something that was part of your wealth, then you have to choose between two types of annuities. One of them is consuming capital, all the capital in it. The other one is consuming just up to 50%. So always 50% would be left to beneficiaries whenever you happen to pass away. Okay. But if you are not trying, if you are doing the annuity not to get the benefit from the capital gain reduction, then you can choose annuities that consume or not consume capital. So you might have some return of that annuity, and then have to your inheritance the full amount you invested in. Even we have one of them that guarantees you 105% of what you put it on it. So you're not only not consuming capital, but you will leave 105% of what you invested on that annuity. That sometimes is useful for people that, excuse me for the interruption, for people that we use it with people that maybe has pension plans that they don't plan to use. They want to leave to their children, and doing this conversion to an annuity gives their children a 5% more of money, and they can have a little return from that they can enjoy themselves.
Mhm.
so there's no capital erosion.
This is personal, Rafael, and you could do a project for individuals. So that means
Yes.
you could always work out on that possible scenario. So, but up to 240,000 euros, you could convert into an annuity, and you could plan out of these two models, correct? So,
Yes,
and
yes.
what to leave to the beneficiaries,
The,
correct?
the 240,000 limit applies when you are doing this to have the benefits on the capital gains. If you are not using it to have the benefits from the selling of some asset and get rid of that, then you can constitute an annuity that is bigger than 240,000 euros. Okay, and the 240,000 euros applies for each individual. So if you're selling a property and you're a marriage and the property is co-owned by the marriage, you can use as much as 480,000 of the selling price to constitute annuities and get a
avoid
proportional reduction of the capital gains. Yeah.
Quite interesting, actually. For those who might be thinking about this scenario, I think it's worth talking to someone who knows this specific product. I mean, obviously, Rafael, or anyone who sometimes they just are thinking about selling because they don't want to rent it out, Rafa, and they are thinking that it is a hassle, but they're afraid of paying probably 30%.
Yeah.
Which is a lot of money at the end of the day, and they need it as a pension,
Yeah.
So it's nice to have a pension.
Yeah, and sometimes it happens a lot with assets that were bought very, very long ago, and the capital gain contained on that asset is so big that they are afraid that the tax agency is going to get a very big part of the selling price. So on those cases, it has a lot of advantages.
Which actually is
any case has to be studied particularly, because in the analysis you have also taken into account what other sources of income you have, so the mix is sufficient, looking the whole mix of income sources.
It's quite interesting because some of our clients just bought 30 years ago a property. They start renting it out. They come to retire here, and when they get old, they just say, "I don't really want the hassle," But sometimes when you do the simulation of the tax, you would agree, Pedro, that some clients are reluctant to do anything, and I find it quite efficient renting it out. But some people just say, "I don't want to do any longer." So the annuity could be an option, and you could create a project with different options, correct, Rafa? So this is something you could create as a plan. Yeah. Okay.
Yeah.
Good.
And we could study all the advantages, all the tax advantages we can use at the selling time of that property. So we can use part of it onto an annuity and part of it to make, let's say, an investment fund portfolio that has also its advantages of tax deferring and everything. So there's always a need to study case by case, because it takes into account the whole wealth and all the income sources of the client to make the most efficient election.
Right. Okay. A few answers to questions. Somebody asked for where is the box number of Modelo 100 with US Social Security income to be reported? Well, obviously 0003. Is long-term rental rebate also applicable to properties abroad, outside Europe, like the UAE? Yes. Dividends taxes from UK company, it goes from 19% to 30%. If you resell crypto at a loss, does it give a tax credit on other financial incomes? The answer is yes, but only on other capital gain. No, you cannot mix income from work and income from investment. I don't know if Michael wants to add anything extra. Obviously, we're running out of time, Pedro. Pedro, would you like to add anything?
Well, about this US Social Security, what we have, obviously it's in the regular scale on income, but also there's some, this is what we see. There is a tax is already paid, and it's like a Medicare is paid on the US Social Security. And obviously, it's important that you, at the end, you instruct some gestoria or tax advisor, a lawyer that deals with taxes in terms of, obviously, you could include some deduction, and this is in order to avoid double taxation on this, about this income. This income needs to be declared and paid in Spain, but also you could include not all the taxes, but also some issue in terms of deduct some payments that you have already done.
Rafael, I think you're getting something as well. I don't know if you're able to answer.
Yes, I see this fiscality of distributive versus accumulative ETFs. Well, this is like in mutual funds. If you have a fund that has distribution throughout the year, then you have to declare on that year the distribution. The distribution will have a 19% retention at origin, and then you add it on your financial income of the Declaración de la Renta, and that's it. That's quite simple. And the cumulative has just the benefit that that taxation is still on your wealth and working for you. So it's just a matter of whether you want to have a rent coming out of that investment every year, or you want to have a cumulative investment.
Okay. Okay, Michael, anything else from your side?
No, because there are lots of questions there, but they're all just, I think they're too general to answer. Sorry, too specific people to answer, because they're not going to be very helpful.
I mean, obviously, Michael, could you share your email address? Well, obviously it's on the screen, but in the chat as well for those, Pedro and Rafael. So if anybody needs to organize a video conference with Michael, Pedro, or Rafael for the specific or to do a simulation plan, please contact us. Obviously, all this content is general. This is for your own benefit. You could go into a website and learn a little bit more general advice. Even you could speak to Paul, that is 24 hours there in the website, giving you information. He's our IA agent with all the content from our website, trying to explain to you a bit how it works. But as I said, planning is always an asset, and having the right advisor as well. I always encourage people to do planning, as Michael said, about inheritance, wills, income tax, relocation, because the better and the earlier you do it, the more benefit you could get it. Okay, Michael, Pedro, Rafael, thank you very much for joining us today, for your time, valuable time.
Thank you.
Thank you all for being there. This is going to be recorded, and you can watch it back from tomorrow. Now I'm going to pass it over to Juanfran, who's going to share with you a video. Thank you, Juanfran. Thank you all. See you soon.
Trust is vital when you're in another country. If you want to buy a home, set up business relationships, or apply for a residence permit, you need to be able to count on the best independent legal aid. Pellicer and Heredia is an international firm of lawyers with over 20 years' experience and one single aim: for you to live at ease in Spain. In order to give you a clear, streamlined, and fast response, we work with a cross-disciplinary team of professionals specializing in the main legal fields: civil law, foreigners' affairs, business law, tax and financial law, and international law. And to ensure that you're kept informed and up to date with everything, we have 6 offices on the Eastern Coast. Whether you're from here or abroad, we will always stand by you and speak your language. Our relationship is based on openness, professionalism, and a commitment to finding legal solutions in your best interests and for your peace of mind. Pellicer and Heredia, international lawyers.